The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 9th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that, well, just simply tools that empower human potential. Because living up to our potential, that's something that you and we must master each and every day. So let's begin our day with some empowering beliefs. You know, beliefs have the power to create and the power to destroy. You and we have the awesome ability to take any experience of our lives and create meaning that either disempowers us or one that can literally save our lives. Think about it like this. There is only one thing that you can control in your life. There's only one thing that you can control, and that is the meaning that you give to something. That's the beauty of the markets we trade. We've got bulls, we have bears. One that sees an event as a selling opportunity, one as a buying opportunity. Your beliefs, the meaning that you give to events, statements, criticisms, whatever they are, your beliefs, you are the one that can control the meaning of that. That, I think, is the most cool, most awesome power that you and I have. Why? Because what we can or cannot do, what we consider possible or impossible, it's rarely a function of our true capability. It's more likely a function of our beliefs about who we are. And that matters because why? Because all personal breakthroughs begin with a change in beliefs. So how do we change? Excellent question. Thank you for asking. I've found the most effective way to change is to get our brain to associate massive pain to the old disempowering belief. We must believe at the deepest level with all kinds of conviction that our disempowering beliefs have cost us in our past, and if we continue, they will cost us in the present. Ultimately, they will bring us pain in the future. Sometimes knowing what we don't want is just as important as knowing what we do want. I think knowing both, though, is key because once we rid ourselves of our disempowering belief, we must associate tremendous pleasure to the idea of adopting a new empowering belief. And lastly, folks, we must know that in any moment, a decision that we make can change the course of our life and change it forever. The very next person we stand behind in line could be at a grocery store, could be anywhere, could be here at TFNN. The very next person we sit next to on an airplane, the very next phone call that we make or the one that we receive, the very next movie we see. Maybe it's the book we read or even the page that we turn. Any of these and many others could be the single thing that causes the floodgates to open. And then all of the things that we've been waiting for, they will fall into place. Well, let's go check out what's fallen into place in these markets here. Right now, we've got the Dow off 12 points, trading out at 14,763. The S&P is down a point at 1654. NASDAQ off 26 at 3668. NASDAQ leading the charge here on the way down. Russell 2000 off 4 points. NASDAQ 100 slightly behind as far as the NASDAQ in general. It's off 18 points, trading at 3135. Interesting. New York Stock Exchange is up 61 pennies out here. Always something to think about. It does have 248 net declining issues. No chance the bulls take control of the market today. They would need 3,357 issues, net advancing issues, that is. That is not going to happen. Goldilocks giving it up here. It's off $28 right now. That is trading out at $12.96. Silver giving up even larger. That's down 62 pennies, trading out at $21.82. Light sweet crude off $1.27. That's trading out at $102.21. Our call-in number 877-927-6648. Give us a call. would be happy to take a look at your stock chart. Let's go start off here. We're going to take a look at the indexes. We'll go over to the ETFs. We're going to first start off with the 30-minute just to see what we've got going on here. We did have a little hammer candle that formed here during the 10 a.m. session. That says the low there, 1646.75. Inside the ES Mini is very critical. Close below that. If you're long, you're wrong. Of course, it also has some support. Little Morningstar candle just slightly below that. And that's at the level of 1646. Even Steven out there. So that's really our support with inside the market. What we can't see on the ES30 is it's moved down into that oversold condition. So we should see a market either begin to move sideways. It doesn't necessarily have to happen at 10, 12 a.m. here, but we should start to see a market move sideways or bounce from here. Of course, what it's going to have to get over is this area of resistance that's being set up here by this front. The bear is really hanging out at about the highs of 1658.25. So that's what's going on in the shorter term. Let's go take a look at the actual indexes, see what they're doing. We'll start off with the S&P 500. Big, wide-ranging, that's the Dow futures. Let me switch over to the actual S&P 500. I thought that chart didn't look right. Now let's take a look at the S&P 500. This thing has below that blew away with a wide-ranging bar, blew away that 0.618 retracement level, 1666. It also blew away the shorter-term rising price channel. That's the price channel coming off of the November 16th area. That sets up a move down to the 0.786 area, 1649. So just a few points down there. We'll see if it can find some support. Of course, what it's also doing, it's got this downdraft bar from August 27th out here, the top of which is 1652.54. That has not been hit thus far. If this closes, well, I would say if it closes, certainly below 1649, but I'll say inside that bar from August 27th, that could set up a move all the way down to the August 28th low out there. That would be a break of the 0.786. What this has done, as I say, it has broken the shorter-term rising price channel. At some point in time here, we're going to see price try to get back up inside that level. So it'll make a run for that area. What's that price area or range? You know, it's probably somewhere between 1676, we'll call it, maybe 1673 to 1676 at the moment. Right now it's trading out at 1653 out there. So that's on the S&P 500. That is on the daily chart. Let's go take a look at the Dow daily chart. We'll stick to daily charts at the moment. The Dow here trying to take on the low. Maybe it is already 14,760.41. That's the low of its most recent swing point, August 28th. Let's see what it's been down to so far. 14,755. So it has tackled the swing point low of 14,760. If it closes below 14,760.40, that'll set up a run to go test the low of June 24th out there. Now, the last time that the Dow was down in that area was on the, just tested the highs, was back there on August 28th. So we'll see. It's going to be very important, to watch where the Dow trades to and closes today. You're going to want to really keep an eye on the number of 14,795.79. Because so far, the Dow has not had the volume to bust through those lows. And if it closes above 14,795.79, that's what will set up a retracement into the marketplace. We take a look at the Russell 2000. Right now, the Russell is trading down about 5 points out at 1040. Wide-ranging bar yesterday. What the Russell did, and we'll see it was more prominent on the ETF, on the IWM, but it broke through that rising trend line versus the price channel here. This is a trend line coming off of the November 16th low out there. Did it with a wide-ranging bar. If we take a look at retracements now from its most recent swing point low, that would be September the 3rd. That low is 10.1009 up to the high that was put in on October the 2nd. What you'll see is the 0.618 level, 1038.94, looks to be the next area for it to go ahead and tag and hit. If that area does not hold, 1025 becomes the next target area. That happens to be the 0.786 retracement. It also happens to be the high of September 3rd. Well, the high of September 3rd, the swing point is 1026.84, so it's just a point or so above that. And that's if 1038.94 fails. If we take a look at the composite itself, all of these finally giving it up yesterday on both price and volume. The NASDAQ here getting back below an old area of support. That was set up by that bearish engulfing candle from August the 6th. The August 5th high, which was 36.94.19. You're trading below that now. You're trading at 36.39. It's back into the price channel here, the rising price channel. That sets up, if it does take out August 27th out there, that'll set up in fact, if it takes out August 27th, it probably is going to be a test of that rising price channel out there. So we've seen some demolition. We've seen some volume off of the high, so we have certainly seen some warning signals out here. You still need to be focused and pay attention to the NASDAQ composite. Yes, it gave it up on some price and some volume, but the trend has still not been broken out here. And if we go take a look at the longer term charts out here, let me see if I've got one in here in this tab. Yeah, if we take a look, well, the weekly chart, that doesn't look that good here on the NASDAQ. But we've got a lot of time left in the week. Now, of course, you say, what do you mean doesn't look so good? Well, if you take a look at that bar there on the composite, on the weekly chart, you can see right now that it is trading below a level of support, and that support really that we have identified as the top of that August 3rd candle out there. So you can see we're trading back below. That was a bearish engulfing candle. Says that should have acted as a level of support. So the number you want to be paying attention to, it's only Wednesday, early in the trading session. So you'll want to write this down and come back and take a look at it come Friday. That number you want to be paying attention to is 36.8422. Close below that, sets up, I would have to say, the next level of support out here, candle-wise. Probably have to go with this little key reversal session here, because once price broke above it, and that would be the May 24th, the week of May 24th. The day is actually May 22nd, where we had that session, and that would be 35.3204. I would say that would likely be the next area of support if you see a close below. And again, that number that you want to pay attention to, 36.8422. We got a lot of time left in trading, but that's the number you want to be paying attention to for sure. We take a look at the New York Stock Exchange. That also was strong. That gave it up yesterday with a wide-ranging bar. That's now down, trading in and near the 0.618 retracement level. 94.98, of course, that is normal. That is usual. In fact, I want to go back to the Dow here for a moment because it's been the weak link. We do need to pay attention on the daily chart. Yeah, on the daily chart for the Dow, we can also see as it's coming down into these prior areas, these prior swing points, and it's coming in there with lighter volume. We'll switch over to the diamonds here. What you can see is the Dow is the first one down to the bottom of that 30-ish threshold area for the 14-period relative strength index, and that is where you start to get into the oversold condition out here. If we take the Dow back, so I want to go ahead and show that to you. You can see each time that it gets down in this area, we see some kind of a bounce unfold, at least a bounce unfold. If I take this back further, back into November 16th, that's what we saw. Now it got further. It was able to run further into a further oversold area, but it is the time period where you really want to be watching. If you go back prior to that, you'd go back into the June of 2012 level. You go back into the May of 2012 level. So it's at areas here, if we just take a look at past behavior patterns, as that rubber band gets stretched, it's an area we must keep an eye on. 877-927-6648. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 33 points right now. S&P is up 2. New York Stock Exchange actually leading the charge, I believe, out here. I mean, see percentage-wise. No, you got the Dow leading the charge on the way up 0.2%, and the NYSE just slightly behind that. Of course, Goldilocks falling apart. That's down 27. Well, I won't say falling apart, but it's down $27. And silver's off 62. And the King is in the building. It's up 400 ticks right now, trading out at 80.53. So let's spend some time here on the currency market. Yesterday, we were taking a look at the A to B equals CD down inside the U.S. dollar, Japanese yen. And the number that I gave you can't get bullish on that trade because it's a Gartley buy pattern. But you need confirmation. And confirmation to me was a close above 97.321. And we saw yesterday, during the trading session, or during the time period that I was on the air, I should say, we saw it give us that initial bullish engulfing candle formation, and then it sold off. It never made it above the October 7th high out there. At least wrapping the body would have given you a potential buy signal out here. However, as I do say, it didn't do that. Now, today, so far, a little different story. It's flirting with the number 97.321. That's what you want to go ahead and put down on a pad of paper. Right now it's at 97.328 out there. You get it close above that, that would be your confirmation. Now your position, you'd have to have a stop below Well, I'd have a stop below the 96.55 level. So you just change your position size with regard to number of contracts. You just can expand your stop on the trade out there. But that would be in your targets now, your normal target, just like anything else that you would first put in. Your normal target's going to be your 0.618 retracement. In this case here, you're looking at 99.05. So you got to do the reward to risk to determine whether or not that is a good enough setup for yourself out there. Of course, if that is taken out, your other target's really going to be the swing point, which is September 20th. That's going to be the 99.16 to 99.65 level. It doesn't mean it has to stop there, but that's your natural place of where you have buyers and sellers. So that's on the U.S. dollar, Japanese yen. It's got a very nice pattern out there. It just simply has not confirmed. So you got the yen trying to weaken against the dollar. That's what's giving the strength to the U.S. dollar, part of what's giving the strength to the U.S. dollar. Let's take a look at the Great British Pound U.S. dollar. That's off about 155 pips as we speak here. That's trading out at 1.593 out here. So this still, I'll be a true believer that this thing is going to absolutely fail when it gets below the September 18th level, and that is 1.589, because it's had a very powerful, strong move. It has been working off a overbought condition. Of course, what it did do, it was making a higher high on less relative strength. So you can see how this works, folks. This works on any time frame. It works on any instrument out there. And so you want to make sure that you've got this, at least you're aware of it, because it's really about momentum. Which way is the momentum going? So inside the pound, if in fact it has made its highs, where is it headed to? Well, if you just go from the low that was put in, we'll take a look at actually two retracement areas and see if we can find a convergence. The first thing, it'd come down to the low on July 10th, 2013, 1.484, all the way up to the high that was put in. That high again, that little shooting star on October the 1st. So your dead cat bounce, 1.57. That is clearly part of the target range. Now let's take a look at that C to D leg that had formed out here. Very strong C to D leg. And we'll try to put this in Technicolor, different color. It's blue. Let's see if I can find red. There's red. So you can see the 0.618 retracement of the C to D leg gets you right in range with, that's where you've got confluence, basically between 1.570 and 1.574 inside of the Great British Pound U.S. dollar. It looks like that is where it wants to pull back to be a true believer out here, because the last breakout was from this trading session, the candle from September the 18th out there, and that low is 1.589. Want to close below that, and that sets up your move to the 157-ish range out there. So that's on the Great British Pound U.S. dollar. You can see it, too, giving some strength to the U.S. dollar index, up about 368 points or pips right now, ticks right now. Let's take a look at the euro U.S. dollar. That, too, backing off here this morning, but really not too bad. You know, this is working off an overbought condition that it formed, that it got into on October 3rd. Now, unlike the Great British Pound that was making higher highs on less relative strength, the relative strength reading on this trading session here, up at those highs, 70.76. Last time it got up into that level, it had only made about a 69.59 area. So it actually made a higher high with more relative strength. Something to think about. We'll be right back, folks. When we get back, we'll go take a look at Goldilocks, silver, light sweet crude, and we'll go take a look and see what candle here, if any, is going to form at 10:30. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 24 points right now. S&P slightly green, up about 2. New York Stock Exchange up 16. NASDAQ off. NASDAQ 100 at 5 points. NASDAQ Composite down 11. Oh, boy, I might sneeze. Hold on a second here. Let me see if I can hold that. Don't really want to sneeze into this microphone on the air, and I don't have the sneeze kill button. Okay, seems like we are past that. So let's go take a look at the U.S. dollar index. We were looking at the currency pairs earlier. If we take a look at the weekly chart out here of the U.S. dollar index, now, the key here as we take a look at this is this broke its rising price channel. This is the price channel with the U.S. dollar index moving off of its lows from back in May of 2011 when the U.S. dollar index was down at 72.86. And this is the weekly chart we're looking at. Now, the weekly chart broke through that rising price channel back on September the 20th and came through it with some conviction. Now, what formed last week, and this is important, it formed a hammer candle. In fact, last week was a hammer candle. Right now, if it were to close right now today, in fact, if it were to close, well, here's the deal. If it closes at 80.46 or higher, it's at 80.50, you'd have a hammer candle and a bullish engulfing candle. So you'd have cemented a pretty decent low. Now, what that means is that it's a low, and that price will try to go ahead and get back inside that rising price channel. But it will have given you an area of where the bulls are hanging out. There was a bullish engulfing candle right here. This gave way. This was at the bottom, in essence, of that rising price channel. This was down on June 21st, the week of June 21st. If we look for where the bulls were then last here, you had a hammer candle right back here the week of December 21st. That area was tested. You can see was tested. That was testing also the bottom of the rising price channel, almost like the bottom of the rising sun out there, but the bottom of the rising price channel on February the 1st. And then you had a bullish engulfing candle that took place on February 8th. So now what we're seeing here is where the bulls are lining themselves up inside of the U.S. dollar index out there. That's on the weekly chart. On the monthly chart out here, see if I've got a monthly chart. No real, I don't have, what do I have out here? Nothing other than some candles for us to take a look at. So let's do that. Let's try to figure out where the bulls are. Now, if the candle ended like this, look, it's too far. It's too close. We're just beginning of the month. But if this were where the month ended, that's a hammer candle on a monthly chart out here inside the U.S. dollar index. That's really all I've got to say at this stage. Well, let's take a look at retracements, actually. Let's go from the low out here back in February 2013 all the way up to the high, and you can see that the 0.786 area last month where we hit $80.21 out here. That is the, let me update to make sure I'm updated here. Yep, I am. That is that's a retracement that we have seen. Of course, coming in with a wide-ranging bar like this for the month of September, that is not a real bullish sign out here inside the U.S. dollar index. Now, the weekly, we know that it broke that rising price channel. So that's what I would be paying attention to if you were trading any instruments based off of this. Of course, you got to really look at the basket of currencies themselves to truly see what they are doing out there. If we go down into the shorter term time frames, let's take a look at the euro, Japanese yen. This is the chart here that best emulates what's going on inside the stock markets here, the S&P 500. What the euro, Japanese yen did overnight. Coming into the, when we take during the first show, we were looking at the ES mini as it was forming some bottoming patterns out there. And what we can see here, as Japan came online last night, it opened up down. We'll take a look at their stock chart. But the euro, Japanese yen, that was moving higher. Our futures were moving higher, a bit higher last night. The S&P futures got up to, I believe, almost maybe about 7 points above the close of yesterday's session. And the euro, Japanese yen, for a second time, this is the 30-minute chart that we're looking at, was trying to bust through to the upside. And it failed again. Price came back inside there. And that's really what you need to see in order for any type of significant bounce, or perhaps more than a bounce, take place inside the market. So what bears want to be doing is paying attention to this price channel here, to this descending price channel, because if price closes above it, comes back, tests it, and then stays above it, that would actually be your signal to go ahead and truly tighten up your stops or go ahead and exit your short positions in the marketplace, because it's the currency market that is going to be the first signal as to what is going on. And so far, that channel line has not been busted out there. So that's what I would be watching on. I would be watching on a shorter term. Goldilocks right now down $25 and change here. It's going to be flirting with that swing point again from back on September 18th. The low there, $12.91. We've got an A to B equals CD down. That would take gold down to, in my opinion, it would take it down to $11.94. And if it can visit $11.94, it'll go test the actual low of June 28th. That price level, $11.79.40 out here. Silver looks like it's getting back into its lower part of the range. It's now off about 2.5%. By the lower part of the range, I'm just referring to the October 1st candle out here. What we want to watch on silver on this pullback. So with silver having been the strongest, what you can do is you can take a look at a little rising price channel coming off of the candle session, the open from June 28th. Just use as your next two touch points, both the open and or close from August the 7th and the open from August the 8th out there. We can see that price has maintained that slightly rising price channel out there. Expect that to be the first level of support, which is somewhere around the 21.17-ish type range. Right now it's trading out at 21.86. That is on silver. In light sweet crude, that now breaking lower. So this resistance area here, we got a lot of time left in the trading session today, but it has really struggled to get back above that rising trend line out here. If, in fact, it decides it can't bust it up, well, it'll try to bust it down. And in the case of light sweet crude, the busting it down will be getting back and testing its original breakout area of its consolidation low, and that took place on July the 5th, and that's a price point of about $99. So that would be the next area of support. The 200-day exponential moving average happens to be also 99.61. We have not seen light sweet crude below that level since May of 2013, May 31st, I'm sorry, to be exact. That was the last time that light sweet crude went below that. If we take a look at bonds, just simply another sideways day, another small-bodied candle. Bonds not tipping their hands one way or the other out here. Natural gas running into some resistance. It had nice volume yesterday, about 69,000 contracts. It's trying to break through its descending price channel out here. This is the December contract that we are looking at. You can see once it got up above it. Now, today could be considered a test. Today could be considered a test of this, but it's also going to have to really break through the trend line as well. That trend line, so you've got really two lines if you're watching this on Tiger TV. You've got the blue descending lines, that's your price channel, and then you've got your trend line. Take that off of the high of May 1st, and your next area would be the September 19th. You get natural gas to get above that level, which is, well, I don't know what it's going to be at exactly, but we'll call it somewhere right around the 393 area, and then 420. 4.199 is the next target, and that would be on natural gas. Let's go up to Long Island, New York, to Pete. Pete, thanks for calling. Thanks for holding. How are you doing this morning?
Good morning, Steve. I'm doing very well. Thank you for asking. I have a question for you, and it has to do with IBM. Okay. IBM's trading above average volume today. It's up about $1.50. What are we looking for here? I know it broke support, but how does it look today to you?
Well, tell me I'll give you my answer on what's the time frame. Are you in a trade, looking to get in a trade? Are you shorter term, longer term?
Well, that's a good question. I did go short IBM yesterday when it broke down.
Okay.
And I'm looking over the next, we have earnings coming out, by the way, on it, I believe on Wednesday, and that might have a significant effect on it. But, over the next 10 days, the next 2 weeks.
Well, it did break a long-term consolidation level, and that says that it has the potential of 30 points to the downside, which would take IBM into the 150-ish range and take you all the way back into the August 2011 area out there. Now, what it's going to likely do here, just like the S&P, maybe the Dow, what it should do at some point in time here, Pete, is it should try to attempt to get back inside that consolidation area. And what you want to see is see a rejection of that level. Now, yesterday had good volume, so it broke through the consolidation level with good volume, but only 5. But to put it in perspective, it was a break with 5.5 million shares. And the real breakout on this was on January 20th, Pete, and that was with 13 million shares to the upside, 12.8 million to be exact. So if we go take a look at the weekly chart, I'm going to put that up on my screen next year. And also, are you watching on Tiger TV?
Yes, I am.
What it's also done here, it's got this little descending price channel that seems to have held it in place here. It just slightly budged through it yesterday. So, so that's one thing to always be paying attention. Now, volume so far today is 1.2 million shares in what we've been trading for a little over an hour versus yesterday down with 5.5. So, you're right. It's got some pretty decent volume in it. But let's put it on the weekly chart. Let's see what the weekly chart shows us. And the weekly chart shows us that the swing point that it's really trading into, so the breakout was with 32 million shares on a weekly basis, and that was on the week of January 20th. And so far, I think this is probably through yesterday, 9.5 million shares to the downside. You're going to want to see it in essence in order to tell you that your short position is good for the next 10 days or so. You really want to see it close below the January 13th swing point, which is 177.35. You'd like to see it close below that with more than 26 million shares by the end of Friday.
And you would have your stop where? 182?
I would say first my stop would have been dependent upon my position size. So if I take a look at Let me see if I can actually do this while we're on the air. I need to go switch over to something else. Let me do this for you. The way that I take a look at stops, especially when I get into a trade, is I take a look at the average true range, and I take a look at what the last 10 days are, because that's just normal breathing pattern of the market. And in the case of IBM, it's $2.23. So that's your average true range. So far, the low has been 178.71. Ideally, your stop would be if it closes back above, if it closes back above 180, 185, I would say I would venture to go ahead and maybe, take a small loss on that.
Absolutely. Yeah.
But what you have to for this stock to move $2.23 on a daily basis, which today, if we go back to the daily chart here, what's the actual movement? So from low to high, 179.10 to 180. It hasn't even moved the average true range today. So I wouldn't freak out by a $2 move today, but hopefully you would take something like that into consideration when you had created your position size out there. So far it looks like a good trade, and only until it breaks back inside the consolidation would I then begin to worry.
Okay, and by the way, thanks. You and Tom gave us a great call on gold, and I appreciate it very much.
Well, thanks. We're glad to get them right every now and then, huh?
More than average. Thank you.
All right. Thanks so much for calling, Pete. I appreciate it. So, folks, whenever you're entering a trade, and I'll put this up on the screen here, I think one of the key things to always do is one of the key things you want to do is you don't want to over trade, and it's really your position size. And one of the things that I provide for my clients, in fact, if you've not done it, it may be on the homepage of TFNN.com. I'd have to go check out a different page for that. It's called the position size calculator. But go over to the homepage of TFNN.com. It's a great place to visit anyways and take a look at all the new information that's available to you. But over on the left-hand side, what you will see is a little up arrow, down arrow key. See if you can find a tool there. It's called the position size calculator. And in the case of IBM, on any trade, so in the case here, let's try to take IBM. Let's say one wanted to actually go short it today. And in this case here, it's really all about your position size. So it's a stock. Let's say you wanted to go short. Let's say that you had, we'll use $10,000 would be in your trading account. So I put in my trading capital. And let's say you wanted to go short it now for whatever reason. So 179.96 is what it's trading at. And if you believe that 30-point move to the downside is in order, you'd be looking at somewhere right around, I think we said 180, so around 150. I'll just put in $150. So if I do this calculate button, this is going to give me everything that I need to know. A 1% risk on this, using a $2.23 daily true range. Now, when I use that average true range, what I like to do is multiply that times a Fibonacci number, and I like to use 1.618. This would say a 1% risk, which I wouldn't even suggest that you take because it would require 50% of your holdings, because this says you could buy, in essence, 28 shares or 30 shares out here. So really the risk on this trade here, I would back it off, because on any one trade when it comes to a stock, what you don't want to do is you don't want to go ahead and put maybe more than 10% into an individual stock. Into an ETF like a index ETF, I'd say 40% might be your max out there. And if you're doing a sector like the XLF or the XLE, I would say 30% might be your max out there. But make sure this would tell you you've got about an 8-to-1 reward to risk, but you don't want to put 50% of your capital in any one individual stock. Right now, we've got the Dow off $3, S&P down 1. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report to celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd. TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's trading off 21 right now, S&P off 3, NASDAQ off 24 points out here. And let's go peek in on Google. Google here is attacking its hammer candle. Now, the hammer candle that we're taking a look at inside Google takes us back into the swing point of June 6th. Now, the volume on that trading session was 2.5 million shares. The first time down to test that area was back on August 28th, had 1.3 million shares, August 29th, 1.4 million shares, and 1.8 million shares on August 30th. That was 1.8 going against 2.5. Was not enough to bust it down. If I expand this out here, I can do the ABC a little bit later. Let's do that. Let me actually clean this up just a tad. Oh, man. Let me see if I can clean it up here, right there, just to give you a little cleaner chart to look at out here. And what's interesting about Google, actually, probably one of the more unique plays with inside Google, I'll come back to the hammer candle, and it's a wild thing to look at. But if you take a look at the earnings release dates on Google, And I went back and I went back through every earnings release date. I've got it in a spreadsheet. I put it somewhere where I won't lose it, but I can't remember exactly where I put that. But I will find it. And but if you go back and you do the same kind of work out there, what you'll see is that the earnings dates really give you the direction that Google's going to trade in from basically that time forward. Now what you want to do is you want to take a look at other patterns that are out here. If you're looking at my chart, you can see the last three earnings dates, October 18th. You can see how it traded lower and continued lower, made a nice retracement there. January 22nd, gapped up, went ahead and made a nice expansion there. How about the earnings session here? Looks like April 19th, moves up, makes another expansion of a set of swing points here. July 19th was the last one, moves down, comes back and tests that support level of the hammer candle. Now what it's doing here today is it's testing that level. It's already done 895,000 shares. We've been trading for about an hour and a half's time, so that 895, 898, 900,000 shares going into 2.5. So my math, maybe that would say about 4 million shares. So it's actually got some pretty big volume as it comes into the hammer. So if, in fact, you get a close below a hammer, the expression is, if you're long, you're wrong out there. And that's what it would be saying inside of Google. What we also have is you've got a 3-candle reversal pattern out here that also took place as the last move down was testing that hammer candle. You got a little Morningstar bullish reversal signal pattern. That was from August 27th, August 28th, and August 29th. This would be telling you that the bulls have absolutely lost control of Google. Now, that would then set up a song, and volume-wise, it's coming down with volume. And really, it's a swing point here from August 30th that you're paying attention to, and that's only got 1.8 million shares. That would be setting up an A to B equals CD down. Your A point would be the high from July 16th. Your B point down here would be August 30th. Your C point would be September 19th. Your 1-to-1 will take you down to 823.72. If we take a look at the potential Gartley pattern that this would be setting up, right there at that same level of 823, that would be your 0.618 retracement. Just out of curiosity, what's our B to C expansion? 1.272 is right around 829. So if, in fact, Google closes below the level of 835, 845.56, the likely target area is somewhere between 823 to 829 out there. And if volume continues, then it will move down to about the 801 level. Folks, thanks so much for being here on Wonderful Wednesday. Stay tuned. Basil Chapman, he's up next. Following Basil, we got Larry Pesavento, Daryl Martin, David White, and the Tom O'Brien Show. Have a great Wednesday, folks. Look forward to seeing you tomorrow.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest. And Hertz Global has a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.